protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman. New episodes come your way on Monday and Friday each and every week, so make sure you're subscribed wherever you get your podcasts. With that said, let's jump into the show. Now, Chris, I don't know about you, but I've found myself looking back on 2024 and wondering one simple thing. Where did all the time go?
It went by fast. By the way, I'm older than you. It goes by faster every year. So tie a knot and hang on.
Okay, well, I have been hearing a lot lately that the days are long, but the years are short. And maybe that applies to financial planning as well. I don't know. Everybody's got a different lens through which they view life. But with the end of the year upon us, I think it's time to make some resolutions for 2025. And just about everyone will make some sort of resolution, but we want to focus on the financial ones here. And Let's start with a big one and work our way backwards from here. Resolution number one, optimize your portfolio. And by the way, folks, we're here to help you with that.
Yeah, so let me break down several different aspects of kind of your financial resolution checklist. First one would be to focus on your overall investment mix. It's a great exercise to have your fiduciary advisory team break down how is your portfolio built, and do it at a high level. Do it by asset class, do it by investment mix, break down each individual stock in your portfolio, or have your professional do that. And that'll give you a kind of an eye-opener. So it also relates to what has happened in 2024, because certain sections of your portfolio have performed very well. Some have performed less than well or underperformed associated benchmarks. So it gives you a chance to basically do a high-level look down at my portfolio and say, this has done very, very well. Will that continue? Should we shave out of that and move it to something else? And what has underperformed and what can we improve on? Do not buy and hold. I'm against that strategy, folks. You need more active portfolio management, especially if you're in the stock market, because the stock market moves quickly up and it moves quickly down. So that would be number one. Number two would be to diversify across and within asset classes. The key to this is most people think of diversification as, do I have a diversified stock portfolio? Okay, well, that's one aspect of diversification, right? You may want a mix of international and domestic, small cap, mid cap, large cap. And there are different potential targets and results from investing in different asset classes. But you also need to look at across varying asset classes or investment solutions. So do not limit yourself just to analyze your stock portfolio. What about your bond portfolio? What about insurance products? Do you have life insurance? Do you still need that life insurance policy? If it's expiring, should you re-up and buy another term policy, et cetera, et cetera? What about long-term care, folks? Has anybody analyzed how you're going to pay for long-term care? And I'm talking about a deep study into what am I going to do when one of us, and there's a high probability one of you, if you're married, are going to need home care or long-term care. So that's diversifying across asset classes, just not within them. Number three would be consider the impact of taxes. Again, I do not believe that retirees at a certain age should pay any taxes. But we have the ability, I believe, folks, to decouple you from the worst taxes out there in retirement. And it's called income tax. Very strange that retirees would be paying income tax when there is no income. And it's called a 401k and an IRA pre-tax. They want to treat it like income. The problem is, when you're working, maybe you're making $200,000 a year or $500,000 a year. But when you retire, if you have a multi-million-dollar pre-tax IRA or 401k, and you get into your 70s or 80s, the percentage that you need to pull from that may match what you paid when you were working. So you've got to work diligently with somebody that can decouple you from that tax. And I only want you paying capital gains tax or no taxes at all. That's a big, bold claim, but that's what we work for with our clients every year to restructure how they will be taxed in retirement. So considering the impact of taxes is critical. Number 4 would be monitor and rebalance your portfolio as needed. And this, folks, points to active portfolio management. It is a Wall Street flaw, I believe. And the Wall Street flaw is they set it and they forget it. And 401ks are the worst at this. They basically say, well, here's your list of options. And people are like, well, I guess I need a little bit of this and a little bit of this, or I need all of this. And they're not there to actively rotate, rebalance, because every year the market's changing, folks. The market has skyrocketed over the past 5 years. Do you have the right mix? And should you be actively managed? I believe yes. I don't believe 401ks and retirement plans do a good job of that. The last bullet point on here is choose appropriate benchmarks. And I'll challenge everybody listening right now. What's your benchmark? What's an index? And can you tell me the ticker symbol on it that you benchmark your portfolio against? One of the easiest way to benchmarks, and this is very basic, very simple, but very usable, I believe. Basic way of benchmarking against an index would be to choose an index that has a certain percentage of stocks in it and a certain percentage of bonds. Now, I don't think that's ultimately the way you should benchmark under a financial advisor, but if you're doing this yourself, if you have a 401k and that 401k has 60% or 70% in equities or stocks, large cap stocks, let's say, and 30% or 40% is in fixed income or bonds, you can look up just Google it. Just Google Vanguard, Fidelity, Schwab, 60/40 target date fund and benchmark yourself against that fund, and you should be beating it every year. Otherwise, those indexes you've chosen or those mutual funds you've chosen are underperforming and letting you down. But I have never met, well, let me see if this is true. I believe I have never met somebody for the first time and asked them, what's your expectation for your portfolio and what do you benchmark against, and have them be able to answer that question. So that's alarming to me, and that needs to be fixed. We can certainly do that for you if you'd like us to handle it and set the appropriate benchmarks against it.
We'll give you the phone number, 404-341-6767. That's 404-341-6767. Or over at unleashyourmoney.com, you can click on that button that says Portfolio X-Ray. That's a great way to get started as always. Now, here's another financial resolution that I think could be beneficial, and that is create a budget. Committing to a saving and investing program during your working years is generally looked upon as the best way to boost your net worth and help achieve many of life's important goals. That sounds like something that's worth looking into for sure.
Yeah, and that's another one that new callers or people that visit us for the first time, they struggle with that question. And the question we ask them is, how much do you spend on an annual basis? And, there's a lot of moving parts to that. There's credit cards that you run up and pay off. There's mortgages. There's utilities. There's vacations and trips and clothing. So there's a lot there. And it also is impacted by this nasty word called inflation. When inflation spikes, things get more expensive. And unfortunately, I look at the inflation number a little bit with skepticism because although the government is telling us inflation is coming down substantially, I don't believe we're seeing it in the everyday things we purchase. I don't believe we're seeing it at the grocery store. I don't think we're seeing it when we go out to eat. I don't think we see it when we fill our gas tanks. I don't think we see it with what we pay for insurance. The basic fundamentals of life, those are not down below 2% inflation, in my opinion. So I'm concerned about getting a handle with our clients on how much do we spend, how is inflation going to impact that over time, and how are we going to invest to offset and beat the inflation rate? And I point to things like dividend stocks. Historically, dividend stocks, the dividends rise at a faster rate than inflation. So if inflation's at 3%, typically dividends in a portfolio will increase at 3.5 or 4. That's a great way to hedge away from getting beaten by the inflation bug. The other thing to look for is when inflation is high and hot, possibly and most likely interest rates are higher. So that can be good for you if you're able to loan your money out, meaning buy bonds. Buy them at a higher interest rate than when inflation is below 2% and the Fed has low interest rates and have lowered interest rates. So you can use that as an inflation hedge as well. But there's an exercise that you need to go through, folks, yourselves and also with your financial advisor to determine how much you're going to spend today, next year, next 5 years, 10 years, 20 years. And when we show you the full financial report that breaks down your financial life over the next 30 years, and you say, I'm going to spend $6,000 a month this year, that will balloon. And on the report, you'll see, hey, it goes up to $12,000 a month. Now, don't panic. That's future dollars versus the growth that we can generate in your portfolio, the higher levels of interest and different products. But if you start to deteriorate and pull from your principal, inflation can be a problem. So again, that goes into our full financial planning. So engage us. Call us at 404-341-6767 or go to unleashyourmoney.com. Click on the Portfolio X-ray. Let's begin taking those steps. It's stairs. So take the first step and we'll walk up those stairs and help you to retire comfortably, hopefully with virtually no stress, with a plan that has a high probability of financial success in retirement. All of that is available to you free of charge. We can put it together for you.
Let the Hoffman Financial Group help you put together a full financial plan, one that is designed to help you navigate the highs and lows and create dependable income that will take you both to and through retirement. We're here to do it for you on a complimentary basis. 404-341-6767 is the phone number, 404-341-6767, or sign up for a time to speak with us online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.